Hi, are you one of those people who doesn't really take their super too seriously? Well, I'm just going to explain some things about super to maybe change your views a little bit, because super can be a very important and beneficial part of your financial life. I'm 𝗪𝗜𝗧𝗛𝗡𝗘𝗖𝗧 from Tax Accounting Adelaide, just explaining a little bit about some of the good stuff in super and investing in your super in Australia. So let's just explain some basics in case you don't know, but superannuation is pretty much a low tax environment. So you're only taxed at 15% when you have investments in super at 15% while you're working, and post-retirement it's actually zero, so it becomes basically a tax-free pension, and you can take out your super, of course, tax-free. So that's a really good thing to know right at the start, and to realise that as well. In Australia, the tax system gives you benefits and encourages you to invest in your super by allowing you tax deductions for amounts put into your super. So it's a bit of a no-brainer. If you've got the spare cash and you can put extra money into your super on top of your employee contribution. There are maximum amounts that you can do, but you can claim a tax deduction for investment in yourself, so that's obviously a really good thing. If you're an employee particularly, there's not too many things you can do, so super contributions can be a really good tax deduction for you, so great thing to do. Another really important thing that I don't want you to forget is putting that extra amount into your super. So let's say you're going to get serious into your super, investing into your super in your 40s and 50s. You've got a good 20 years, or nearly 20 years or so, or less if you want to work harder, to contribute to your super. So that means you can get, at the moment, the maximum amount you can put into your super that and claim the tax deduction, or that's part of your employee super contribution. It's going up to 30,000 from the 1st of July 2024. So let's say you commit to getting your 30,000 into your super every year until you're 67 or 65 if you want to retire a bit younger. What an amazing amount. You're going to accumulate a really good amount of money into your super. As I said before, it's a low tax environment, so you're going to claim the tax deductions, so it's going to improve your tax refund every year, maybe 2,000 here or there, maybe even more if you're a higher income earner. And also importantly, by putting this amount into your super, you're going to build a really strong super balance when you retire. And you're going to be above the average bear who's retiring on small super amounts. If you do this contribution, create wealth in a low tax environment for your retirement. There's also other things you can do in super as well. So if you've got a retail investment, that's great. If you want a bit more flexibility, and for instance, it's hard to buy properties at the moment, you want to unlock some of your super and buy maybe an investment property in super, you can have a self-managed super fund, and that is a mechanism to do that as well. We help clients do that as well, so if you're interested in having a chat to us about that, we're happy to speak to you and what's involved in setting up a self-managed super fund. We'd love to meet you and also be your accountant for your self-managed super fund tax returns. So thank you for listening to my talk on super. Yes, it is a great thing to do, and it's great to accumulate wealth, might I add, outside of super and inside of super. It's also good to have some liquidity and investments outside of super, so that you've got some money along the journey on your way to retirement as well. Thank you so much for listening to our video. Feel free to follow us and have more updates. We invite you in for a chat about if you are interested in a self-managed super fund, or speak to your financial advisor as well. Thank you. Bye.